Okay. Oh, wait. Let's get this light on. That might be helpful. All right, there we go. What's going on, everybody? Welcome back to the channel. It's Millennial Trades. So we're going to go over the market, kind of just get a little recap. It would help if the microphone would stay attached to my shirt. We're going to get a little recap, and I do want to go over some news items that I've been meaning to go over. I just haven't really had time to talk about them. But first, I hope everybody had a wonderful Thanksgiving. We played a lot of games this year. We don't normally do that, but the host figured that it would be fun to play charades, and we played a few different games. I don't even know what they were called, but it was a lot of fun. It was goofy, and I didn't think my family was capable of it, but we had a really good time. So I hope you guys had a great time as well on this Thanksgiving. I did break down and I ate a little bit of turkey just to be polite, but you know, today it's back on the straight and narrow, back on the Raw Till 4 vegan diet. I've been fasting a lot as well. Been going to the gym early in the morning. Got up and went today. It was like raining out. I didn't feel like getting out of bed, but I did force myself and I made it to the gym. So, you know, by the time the market opened today, I was feeling really, really good because just being around my family had like lifted my spirits, and, you know, working out early in the morning, going to bed early. I did drink a lot yesterday, but I still went to bed at like 10 o'clock. So I got plenty of sleep. Wasn't even hungover today. Wasn't even hungover for Black Friday. But yeah, you know, got in front of the markets today and I took a trade at the open. We were up a couple $100, and I put this on my shorts. For those of you that are watching my shorts or my reels on Instagram, I hope you're learning something from it, because I'm just trying to share kind of my ideas, what I'm looking at, and why I trade the way I trade. And I've been getting a lot of good feedback on the short videos and the reels, so thank you for that. But yeah, if you go back and watch the short today, you know, up a couple $100, a little over a few $100 in the trading account. So it was a really good week as far as day trading goes. Now, I did put an overnight, you know, over the weekend position on towards the end of the day. Figured I'd go short on PayPal. Not too far out the money. We got the $79 puts, which is literally like $1 or $2 out of the money right now. But just based on the weekly chart, based on the anticipated rate hikes, based on the potential inflation data that we get, or I guess the expectation for the inflation data, because I don't think, because these contracts that I bought 9 of them. I'm holding them over the weekend. They expire next week. They expire on Friday, PayPal puts. So maybe I'll do a short about that. But I did put an overnight position on, and we'll see how it works out. You know, it's kind of a smaller position, 9 contracts. That's not a whole lot for some of the trades that I have put on, but I figured I'd take a shot at another swing trade, see if I could maybe predict or at least have some exposure to that downward volatility that I think is definitely possible. So yeah, that is some of the moves that I made today, this week. It was another, you know, I won't say, well, I will say it was a great week. It was a great week. I'm up, I don't know, something like $1,400, $1,500 again. I think it was a $1,500 week last week. So, you know, that's $3,000 in a couple of weeks just from trading, not to mention the inflation trades a couple of weeks ago. My accounts are looking good. I'm not going to lie. Like, I'm feeling like $1 million, and I'm just trying to contain those emotions, contain my, you know, my psychological weaknesses and defects, and just continue to bang it out every single day. So with that being said, let's go ahead and move on to the markets. And this mic really doesn't want to stay, this microphone really doesn't want to stay attached to my shirt. So we're going to try it like right here. I hope that's not too loud. All right, so that should stay. That should stay. We're already almost 5 minutes into this video, and I haven't even talked about anything halfway important. But I know you guys love the trading update, so you know that's why I keep bringing them to you. As far as the markets are concerned, you know, we were kind of flat today. NASDAQ futures closed down 0.6%. SPY futures closed up 0.03%. So extremely flat on the day. Volatility index ended the day at about 20.5. And these are levels on the VIX, that we really haven't seen in quite some time. It's been a few months. It's probably been at least since, I don't know, maybe August since we've seen these levels. It says 8.15, and I think that's for this year. But anyways, we had, obviously I'm watching the dollar. As I told you guys, I will be watching the dollar on a daily basis. And the dollar kind of pulled back today, right? The dollar started the day real strong, right? It was way up, like right when the pre-market has started. Dollar just kept climbing and climbing. As soon as the market opened, the stock market opened, the dollar started pulling back. And that definitely, I guess, helped to contain some of the downward volatility in the markets. But as soon as the dollar goes up, if we get that move, I'm not saying we will, but if we get a move next week or the week after and the dollar starts rising, you better believe in this environment that we're in, the stocks are going to be under pressure. Not saying they're going to go down, but they will definitely be under pressure. So that's basically what I was looking at. TLT, kind of towards the end of the day, staked out a good day. And remember, it was Black Friday, so we had a shortened trading day. The market was only open till like 1 o'clock. Okay, so as usual, I trade the open, whatever. Later on towards the end of the day, I'm like watching the candle on PayPal, and I'm thinking, hey, I'll just take another swing at this, holding an overnight trade. And that's what I did. So that's pretty much where we're at with that. Now, I do want to go over a few things from tradingeconomics.com that really stand out to me, right? European stocks climb for the 6th week. And there is that number again. I'm not going to get into it in this video. But yes, European stocks seem to be rising. What else is rising in Europe? The natural gas prices, all right? 8% gain for the week. Now, what does that mean? Well, it means that there's probably perhaps more demand in Europe as we're getting into the colder months. We were in a unseasonably warm fall for most of Europe and Northern Europe especially. We're going to have to see how this plays out. That's probably one reason, one reason that we've seen this 8% gain, because there might be some demand on prices. That being said, it's so hard to understand or know where the commodity prices are going. If you were to look at natural gas prices, EU natural gas prices, you'd think, oh, the commodities are trending higher, right? But then look at oil, set for a 3rd weekly fall. These things could turn around at any second. EU natural gas could pull back next week, and probably will. I mean, it's up 6 weeks in a row. But oil set for the 3rd weekly fall, it's possible oil reverses. We just have to be open to both sides, whether it's stocks, commodities, doesn't matter what it is. Could be shit coins. You have to be open to both. Even with shit coins, you have to be open to the upside, possibility. And also, China cuts the RRR by 25 basis points. Essentially, what I understand from this story is that China is reducing the amount of cash that the banks in China have to have on reserve. That's what I believe this is about. And so, what is that telling us? That the Chinese Communist Party is cutting the requirements that these banks in China have to hold. I don't know what it means, but it seemed really, really important. And I think we should be following, not just the Fed, but the central banks and the monetary policy of especially China, but of the ECB, the United Kingdom. There's so many countries that you could follow that are relevant, right? More relevant than the United Kingdom's impact, even with all their monetary issues on global markets. Remember, the Federal Reserve came out in their minutes just a couple of days ago saying that despite the monetary meltdown that we saw in the UK and the fiscal, extravagance, the ridiculousness that we saw just like a month ago, despite all that, it had little impact on global markets, which I still find that fascinating that Jerome Powell came out and said that, because it's like, you think about the history of the UK, you think about how powerful this empire used to be, and now it's been reduced to barely affecting global markets, even when they have a complete monetary meltdown. And another thing I thought was really interesting about this UK story, the new prime minister, I can't remember his name off the top of my head. Let me actually look this up right now. Prime Minister of UK, Rishi Sunak. Rishi Sunak. I believe he's the first Muslim prime minister, if I'm not mistaken about this. I do believe his family is Muslim. I could be wrong about that. I know he's the first person of color to be the prime minister, right? That's a fact. That's a fact. So big accomplishment and huge political moves, political changes going on in the UK. But I literally saw this guy on Zelensky's Instagram, right? Because you guys know, President Zelensky, he posts more on social media than I do. And he posts this video of Prime Minister Sunak traveling to Ukraine, I guess, to pledge billions of pounds. And I'm just thinking to myself, like, didn't they just have a monetary meltdown? Like, didn't the UK just almost, their currency almost collapse? They've got, a back and forth with their fiscal policy. They've got so many incredible problems over there. How does this guy find time to fly to the third world Ukraine and pledge billions of pounds to Zelensky? It's just mind-blowing. But I'll move on from that. So that's pretty much what I've been looking at on the Trading Economics website. It's a great website. I mean, I'll be looking at it while I'm trading, and I recommend all of you check that website every single morning. So some news that we got to get through. The geopolitical issues in Syria. It looks like President Erdogan of Turkey is preparing a ground assault, at least some sort of incursion into Syria. And you have, the Kurds, I think they're called the Democratic Syrian Forces, some sort of, made up CIA spook name they give these different groups that they back, right? They're calling on President Biden to please do something, right? They say that Biden should prevent a Turkish invasion. Turkey is part of NATO, which kind of makes this whole thing more interesting. Because some sources will tell you Turkey has to get permission not only from the United States, but also from Russia. You'll have some sources that say, oh, they just need the US's go. But there's other sources that will say, there's a lot of pressure from Russia as well, perhaps not to go in on these incursions into Syria. And the whole place is a mess, right? The Pentagon and the Defense Department, they got guys saying that if Turkey were to do this, right, were to invade the Syrian border at this point, that it would destabilize the region, as if the region is not destabilized already. So the propaganda on both sides, on all sides, you got to read through it and to really understand the story. You can't really have any biases here. Like me being Greek, I don't particularly like the Turks. I don't particularly like Turkey, right? Because of what they've done to the Greeks over not just the last 100 years, but the last 400 or 500 years. But that being said, I'm keeping my biases out of it. And I can sort of understand from Turkey's perspective the national security threat that whatever's going on in Syria actually poses. The US says it's not backing ISIS. It says it's trying to fight ISIS with these Syrian Democratic Forces. I think they call them the SDF or the DSF, something like that. But, the commander of a Kurdish-led force, let's hope this guy doesn't have any influence over the Biden administration's, policy when it comes to Syria, because we do not want to get wrapped back up in this any more than we already are. I mean, it just goes to show you, like, we've got all this stuff going on in Ukraine, but Syria is still a mess. The problems in Syria and the problems it poses to the rest of Europe, especially with Turkey forcing these people, into the European borders. I mean, you can look all into the drama between Greece and Turkey fighting over their border and what Syrians or quote unquote Syrians get to enter Greece or not. So yeah, the Kurds are basically saying, we believe that it is a political and humanitarian responsibility of the administration and the president himself protecting the cities, protecting the Kurds and the families of the 12,000 martyrs, which is such a strong word. And the fact that you see that written in Politico in this day and age is shocking, especially when you compare it to the context. All right, we also have Kurdish commander. U.S. has a moral duty to prevent Turkish incursions into Syria. So is the U.S. going to get involved here? Is Turkey going to invade, technically invade Syria? They're already doing airstrikes, and this is something else that's really huge. They're getting closer and closer to this ground invasion. I mean, that was a couple of articles from the last couple of days. This is Fox News earlier today. Turkey inches closer to invasion of northern Syria as Islamic State terror threat grows. Obviously, Turkey, at least they're telling the world that the reason they need to bomb Syria, these parts of Syria right now, is because they're trying to fight Islamic terrorism. And they did have some sort of incident in Istanbul, aka Constantinople, a couple of weeks ago. They arrested some woman on this particular incident where, you guessed it, 6 people died. How much of this stuff is true? Does Turkey plan their own sort of FF events? I really don't know. But this is the front story, at least. So think about how all this could affect the already growing geopolitical issues that we see. The instability in the financial markets, supposedly because of Ukraine, which probably has more to do with the COVID lockdowns, but you add this whole Syria thing into the mix, and with Turkey going in, perhaps some military defense contractor stocks could, gaining some exposure to these kind of assets might be good if you're planning on, just these long-running, never-ending quagmire campaigns in the third world. If you think that that's a possibility for the next 5 to 10 years, whatever, you might want to buy some Lockheed Martin or something like that. So that's one reason to follow these kind of stories. As depressing as they are, I don't like war. Just the whole situation in Ukraine is tragic, but there's a lot more to this story, a lot more to all of these stories than meets the eye and that what we're being told. So let's go ahead and talk about the Fed interest rate hikes real quick. All right, this is my next article here. The Fed's last rate hike will come in January, but stocks will still be under pressure from dismal earnings in 2023. And this is coming from Morgan Stanley. And it's like they put out these memos, right? The Fed could stop hiking rates as soon as January of next year. Yeah, they could. They, I guess, could not stop hiking rates. They might go into February, March. It's the same thing with the 50 basis point rate hike in December. Maybe that turns out to be true. I haven't been in this game long enough to, I think, be able to really know. But it just seems to me when the mainstream media is telling me all, think about it. The mainstream media was pushing Sam Bankman-Fried and FTX. And what happened to everybody that followed the mainstream media on that one? And I could go into all the other lies from the mainstream media. My point is that we keep hearing that the Fed's going to slow down. They're going to pivot. They're only going to raise by 50 basis points in December. They're going to stop raising in January. I mean, is any of this true? I'm expressing to you as my viewers that I have my doubts. I think it's possible that Morgan Stanley strategist, whatever his name is here, I think his name is Sheets. Yeah, you'll never believe this. What's his name? Sheets. Pretty sure that's his name. Sheets. Yeah, Sheets. Yeah, Andrew Sheets is his name. Andrew sounds like a weird made up name to me. But anyway, Fed officials have warned the central bank needs to make more progress on inflation, and here's one of the lies of the mainstream media, which remains well above the Fed's 2% target. That would lead you to believe that the Federal Reserve literally has a 2% inflation target, and they don't. The Fed has a 2% average, right? That's their target, is the 2% average. An average over what, though? That's the next question. 10 years, 15 years, 20 years, 25 years, 100 years? We don't know. Only the Fed knows. But if you think about the possibility that they're talking decades, if not a century or more, when it comes to factoring in this average, we could be in this interest rate hike, just the lack of central bank liquidity, this era that we're in. We could be in it for a very, very long time. And I don't think any of us should be so naive as to just believe Mr. Andrew Sheets from Morgan Stanley, when he says they're going to stop raising rates in January. I don't know about that one. Maybe it ends up happening, but I have my doubts. But maybe it will. Maybe it will. There was another story that I thought was interesting. An economist named Mohammed El-Erian, and he worked with the Obama administration on their, he was a bond market trader for a long time, but he also worked with President Barack Obama's Global Development Council. So you take that into consideration, right? Well, maybe this guy is a little bit more like politically favors Obama's policies, or maybe looser monetary policy, that kind of thing. That's what I was thinking, right? Just from learning that he worked with the Obama administration. But this guy actually wrote a commentary in Foreign Affairs, and he's kind of criticizing the Federal Reserve for not moving quick enough on the interest rates when it came to trying to get the inflation down, not recognizing how entrenched inflation really was. He criticizes them on that, but he also criticizes them on how fast they had to raise the interest rates to, essentially make up for lost time. And so essentially from this article from fortune.com, all right, it explains how El-Erian is trying to tell people that not only does the Fed have to worry about lowering inflation without hurting the economy or the economic growth, but now there's this third factor where the Fed also has to consider the financial market volatility because, as he says, we're coming sort of to an end of this era of central banks issuing stimulus, printing all of this money or adding to the balance sheet, however you want to see it. We're coming to an end of this era, and the central bank liquidity is just not there like it's been in previous years. And so not only is the Fed focused supposedly on the economy and the growth, but they also now have to be focused on how every decision they make, it just affects the volatility in the financial markets. So there's kind of a trilemma, perhaps, that Jerome Powell is facing here. And maybe we should be sympathetic to that. Maybe we should have a little bit of faith in our central bankers. I'm not saying that, they're... I'm not saying that we could do it better without them, but a lot of people think that we could. And you hear a lot of this rhetoric on YouTube, and I'm just trying to understand this a little bit more clearly, maybe understand it with a little bit less of a negative bias towards the Fed. And, if this guy El-Erian is right, the supply chain issues, the wars, all of this stuff affects supply and demand, right, which is directly kind of associated to our economy. And, everything, wages, all this kind of thing, how much money, the earnings for companies. So the Fed's focused on that, but there's also this new volatility in the markets, whether that's downward movements, upward. I mean, the moves we've seen the last few weeks have been crazy. Even though the market, I think, is down this week, there was one day a few weeks ago where, the NASDAQ was up like 4 or 5%. So, and then you have the currency issues in the UK. Absolutely unprecedented times that we're living through here. We talked about Turkey earlier. Their inflation rate is like 85%. That's got to add to market instability, right? It's got to be a factor. So there's all this going on, and maybe the Fed feels like if the entire world gets on board with their interest rate hikes, that they can somehow control the global economy from collapsing. But then you have countries like Japan that are kind of bucking the Fed and lowering their interest rates. Same thing with Turkey. Turkey continues to lower the interest rates. So are these countries, are they going to be punished by the Fed for doing so? Are they going to be punished by the dollar? And then the last story here, right? Because we talk about inflation, we talk about the supply chain issues and all of this. I think a great story to wrap all this up with is the unions, okay? Unions align. Timeline for rail strike and railroad emergency prep is now clear. The railroad unions, 4 of them, I guess, voted to strike on December 9th. So this is coming up. If they can't get some sort of contract together by December 9th, this could be really, really bad. And I was looking into this. Apparently, the railroad industry is saying that if the strike goes down, if it goes through, $2 billion a day in damage will be done to the economy. If it goes on for a month, it will be like 1% of the GDP. So very serious story here. Coming from somebody who has been in a union and has worked recently within the last couple of years. I mean, I was a forklift driver for over a year just recently. When it comes to these stories about the unions and kind of what they're fighting for, it is like a new day and age. It's a new era. And I think there's a lot of employees out there that, they no longer want to work 50, 60, 70 hours a week for super low pay and basically no benefits. They want shorter weeks or 40-hour weeks at least, and more sick time, more vacation time. They just want better quality of life. I think that's what all employees out there really want. We kind of, especially in the West and in America, we don't want to feel like we're slaving. We don't want to be in some sort of state where we're working and feeling like, this company's taking advantage of us or this company doesn't appreciate us. I think employees all over America just want a better quality of life. And you have all of these old school kind of, whether it's railroads or warehouses, grocery stores, they're all in this like old school mindset of, you got to work 50, 60, 70 hours a week. You got to break your back every single day. You got to work 12 hours a day, 6 days a week. I just don't think people want to do that. I don't want to do that. And that's why I quit. That's why I'm trading. That's why I'm doing some of the things that I'm doing now. But definitely something to watch because we have no idea how this is going to unfold. So with that being said, I hope you guys enjoy the rest of your Black Friday. Thank you for spending a half an hour of it with me over here. And as always, until next time, I'll see you on the next video.